Hey everybody, welcome back. This is Roman Polnar, and this is training video 1 of 3 where we're going to talk about organizing your finances in the right way to qualify yourself for more financial aid and get more money to pay for college. Now, this is super important because skipping this important step will limit the amount of money that you can get out of the financial aid system. This actually reminds me of a time I took my kids fishing, and we only had one fishing rod between the three of us. And after about an hour of watching them argue about whose turn it was to fish and seeing just one fish in the bucket, I remember wishing we had more fishing poles. Well, it's kind of like that with our financial aid system. If you want to get all the money out of the financial aid system that you need, well, then you need to come prepared and organize your finances in the right way. So take out your pen and paper and let's get started. All right, the first thing I want to mention is how your finances are actually tied to the financial aid awards. Well, let me explain that really quickly. First, you will apply for financial aid by completing an application called the FAFSA. This application is going to ask for two very important things: your income and your savings, to calculate how much the government thinks you can pay for college. And once you submit the form, that number will be calculated and sent to every college where your kids apply. In this way, every one of those colleges will know exactly how much to expect from you before considering you for financial aid. Now, that number is called your expected family contribution, or EFC for short, and it's a very, very important thing for you to remember. This leads me to the next very important thing, which is how our financial aid formula actually works. Here it is. COA minus EFC equals need. All right, don't worry. I'm going to decode this alphabet soup for you. But these are all very, very important terms. So COA stands for cost of attendance. It's the total cost of attending 1 year of college. It includes things like tuition, room and board, books, supplies, fees, and usually the meal plan. The EFC stands for expected family contribution. That's the minimum amount of money that you will be expected to pay for college out of your pocket. Doesn't matter where your kids go. That number will be the same that every college will see. And then lastly, the need is the difference between the two numbers. It's effectively the financial aid that you will be qualified for. So if you look at this formula again, you'll see that the way to qualify yourself for more financial aid is to get a higher need number. And you do that by lowering your expected contribution number. And this is where organizing your finances comes into play. Because if you organize it in the financial aid friendly way, that's how you're going to be able to lower your expected family contribution and qualify yourself for more financial aid. Now remember, everything that we're talking about is made up of your income and your savings. But our financial aid system counts different types of income and different types of savings in different ways. Knowing which is better for financial aid puts you at an advantage. Now, just knowing this already puts you in front of the line ahead of most other families around the country. But knowing is one thing. Doing is what's going to put money in your pocket. So let's now shift gears and talk about how you should organize your finances correctly and in the most financial aid friendly way. I'm going to share with you 5 of the best ways to organize your finances to lower your expected contribution. Now, these 5 areas also happen to be where I see families make the biggest mistakes. So this really serves as a double benefit for you. All right. So number 1, you got to know what doesn't count. So here's a list of 5 things that the financial aid formula does not look at all. They don't count the value of any of these things towards your expected contribution. Retirement accounts don't matter, nor do annuity accounts, which is another form of a retirement account. The value of your home doesn't get considered at all, nor does the cash value life insurance. This is the whole life policies that some of you might have. And if you're a business owner, if you employ less than 100 employees, you don't have to report the value of your business, and it won't be counted towards your expected contribution. So look, if you have these types of savings, for number 1, remember not to put them on the financial aid forms when the time comes for you to fill them out. And number 2, consider putting more money into these categories because the financial aid formula won't look at them. But everything else is fair game. And the government will expect you to sell some of these things to pay for college. All right, number 2, who owns things matters a lot because all savings, all checking accounts, CDs, stocks, and bonds, and even college savings accounts will all count towards your expected contribution, but they will be counted differently depending on who owns them. Everything that parents own in their names will count less, which is a good thing. Everything that kids own in their names will count more, which basically means that any money in your kids' names will increase your expected contribution and make it higher. So if your goal is to lower your expected contribution and increase your financial aid, then it's better to have money in your name as parents than having money in your kids' names. All right. Number 3, in addition to savings, your income will count in determining your expected contribution. So you have to be mindful about what shows up on your taxes every year, and you want to minimize any unnecessary increases that you don't need. Now look, I realize that it's really hard to think of any income as unnecessary, but timing is really important here. Because if you were planning on selling some investments at a profit, be mindful of what shows up on your taxes. And if you're flexible, try to sell those things in a year that won't hurt your financial aid. Also know that any money that your kids earn will not hurt their financial aid as long as they earn less than $6,600. But anything above this number will start to decrease their financial aid awards rather substantially. All right, number 4. If you're a divorced family, parents are often unsure about who should fill out the financial aid forms. Now, the main financial aid form, called the FAFSA, will only ask the custodial parent to report their financial information. And this is a big benefit to families who have joint custody because the financial aid system defines the custodial parent as the parent with whom the child spent 50% of the time plus one extra day, which gives some families an opportunity to plan ahead and pick the parent with more favorable financial situation to fill out the FAFSA. There is a big change, though, that's happening in 2 years where the financial aid system is going to change. And the custodial parent will be the one providing more financial support. So depending on the age of your kids right now and how close they are to college, you want to figure out which of these 2 rules are going to apply to you so you can plan ahead and organize your finances in a way to lower your expected contribution. All right, last but not least, let's look at number 5. And this is for all families out there with generous grandparents who want to help pay for your kids' college. As of right now and through 2022, money saved in the grandparents' names does not count towards your expected contribution and will not reduce your financial aid. But when the money comes out to pay for your kids' college bill, it will reduce their financial aid award for the following year. Now, this is also part of a recent change that the government is making to our financial aid system. So if grandparents are putting money away for your child, you should keep these changes in mind to make sure that they don't hurt your financial aid. All right, let's do a quick room check. How you feeling? I know I covered a lot of ground in this video and I went through it pretty quickly. And I realized that this might seem overwhelming, but I'm hopeful that you took some good notes. And even if you didn't, you can always hit rewind and watch this again. But you should have just learned 5 very important things about organizing your finances in the most financial aid friendly way, meaning that you would be able to qualify and position yourself to receive more financial aid. Look, one thing I must say is that I don't have any of your personal information, right? So it's really important for you to talk about these things with your tax person or your financial advisor before making any big changes to your finances. And if you want my help, check out one of my upcoming financial aid masterclasses where I will be going over everything that I just talked about in this video and much more live on Zoom. Now, during this class, you will get to look over my shoulder as I explain everything, answer your questions, and help everyone in the class make progress during every important step of the way to help every family get the most amount of money that they can from the financial aid system. If you're interested in learning more, just click the button below and you'll see if this class is right for you. And don't worry, you're still getting the 3 training videos that I promised. In the next video that will arrive in your inbox tomorrow, I will walk you through how to find colleges with the best financial aid policies that have money to give you. All right, so I'm just going to close with this final reminder that, look, if you organize your finances correctly ahead of time, which is right now, you'll give yourself more time to learn how to best position your finances in a way to get more money out of the financial aid system and lower the amount that you're going to have to pay out of your pocket. So I hope you found this very helpful, and I'll see you in the video tomorrow.